The IRS came out with the Fresh Start Initiative in 2012, and it really consists of two parts. The first part is it somewhat liberalized the streamlined installment agreement requirements for taxpayers who owe $50,000 or less. And that goes like this. If the taxpayer owes $50,000 or less and it hasn't defaulted on a previous installment agreement in the last 5 years, then they're entitled to what's called a streamlined installment agreement. That means they can take that $50,000, divide it up into 72 monthly installments, and that's the amount of their installment agreement. It's beautiful because the IRS doesn't require that they gather or collect a collection information statement like a 433F or 433A or a 433B. If you're a taxpayer that's had to fill one of those forms out before, you know that's no small thing that the IRS is not requiring that. That thing takes hours to complete accurately, and it usually results in a payment that you'd rather not make every month. The second part of the Fresh Start Initiative is actually wonderful. I've never seen this, and I've always thought this made a lot of sense. And here's what happens. Most taxpayers in these situations have a notice of federal tax lien filed against them. What's a tax lien? A tax lien is notice to the world filed in your local county clerk's office typically that tells the world that you owe this liability to the IRS. It does lots of other things too. It can get in the way of a mortgage closing, buying a house. It can impact your credit report quite severely. There's lots of things that are not good about having a tax lien filed against you. So the cool thing about the Fresh Start Initiative is actually that if you enter into a streamlined installment agreement and you make your first 3 payments using their direct debit option, which means they automatically withdraw that money from your bank account every month for 3 months, they will go ahead and release that federal tax lien, and that's a good thing for taxpayers. It never made sense to me that the IRS is going to go ahead and hurt taxpayers' credit and then demand that they use credit or go out and obtain new credit to pay off their tax liability. It just really didn't make any sense. You see, the IRS is not supposed to file a tax lien against a taxpayer if it's not in the best interest of the government or if it's not in the best interest of the taxpayer. And they never seem to remember that second part. But in the Fresh Start Initiative, it seems like somebody in the government finally had a clue. It's not in the best interest of the taxpayer to file a tax lien against them, and it certainly is in the best interest of the taxpayer and the government in order to withdraw that tax lien and give that taxpayer a better chance of making it through that installment agreement and paying off their obligations to the government. If you have questions about this or really anything else that has to do with IRS problem resolution, I invite you to visit our website at getirshelp.com.